we will be recording this training. And first and foremost, I just want to thank you all for being here. For those of you that don't know who I am, my name is Michael Karabia. I work here at Landmark Title, and I'm just here to kind of moderate and pass the torch over to Christine today, since she is the expert in what the training will be talked on today. Once again, I appreciate everyone that took the time today to join this training. And for many of you that are aware of what FinCEN is, or maybe may not be aware, beginning March 1st, FinCEN real estate reporting is going to requirements will take effect on that date. And these changes are going to be really significant and will impact certain transactions that Christine will go over in our real estate industry. So our goal today is very simple. It's going to just be to provide some clarity, for you to understand, and for you to be better prepared for what's to come. These changes, these changes can create a lot of uncertainty in our real estate industry. This isn't the first time that we've all had to pivot and adapt to new things. And so this also is an opportunity for the agents that understand these requirements and can communicate them confidently to their clients, will definitely position themselves as a true professional in our marketplace. And so here at Landmark, we truly believe that we are an extension beyond the process of not just closing transactions, but to be a partner of value. And so we are here to ensure that, to help you remain informed and compliant, of course, and confident throughout these mandates. So Christine Godbolt, excuse me, will be leading this training today. And I'll go ahead and just turn it over to you, Christine. Thank you.
Well, hello, everybody, and I'm super excited to be able to kind of hang out with you for the next 35 minutes or so and kind of just walk through FinCEN and leave you with a couple resources, and then kind of just give you some information on how Landmark is partnering with some of the industry leading professionals in the FinCEN world, and what we're going to do to try to make this new regulatory compliance item be as easy for your customers as possible. Now, I do want to apologize up front. I am working off of one screen, and so I'm going to have to be flipping back and forth a few times. So I do apologize if that makes it a little bit hard to follow my screens, but I'm going to do my best to make it so that it doesn't look too discombobulated. But I'm going to go ahead and share. Oh, Michael, can you turn the share on? So that I can share my screen?
Yes, I can. Give me 1 second here. Okay, you should have access now.
Right, here we go. All right, so hopefully everybody can see my little PowerPoint, and I'm going to try to poke myself up in the corner so that you don't see all of that. But I just want to talk about FinCEN Residential Real Estate Reporting Rule. What is that rule? And as like Michael said, it goes into effect on March 1st. And I know Michael's hanging out in the background. So if you have any questions, please feel free to throw them in the chat. I want to go as fast or as slow as you guys need me to. So if you want to throw a question in the chat, Michael can stop me and you can throw that question out, and I'll be happy to kind of stop and walk through them. The one thing that I do want to just iterate first is that the FinCEN rule is coming out from the Financial Crimes Enforcement Network. They are obviously an arm of the federal government, and they are the one that is initiating this new rule that goes into effect on March 1st. But overall, the financial crimes is basically kind of what it sounds like. Their job is to kind of safeguard our United States system from illicit activity that has to do with money laundering and with, crimes that happen because of embezzlement and fraud, doing through financial terrorism and things like that. So they are kind of the watchdog, so to speak, on the financial side. Now, FinCEN doesn't typically work with the public. And so that is why, you may have not heard from them before. They work mainly with financial institutions. And so while FinCEN may be new to us, FinCEN is not new to banking institutions, lenders, because they also have many other responsibilities besides just this new rule that's coming to effect. And they work with those local financial institutions to kind of collect financial data, and they analyze that data and then decide if any of that data that they've received is at risk, or they have found somebody who is doing something nefarious. And then they utilize our local enforcement agents to kind of share that critical data. But Financial Crimes Enforcement Network is not like walking into somebody's office and saying, hey, we have found out that you've embezzled. They work mainly behind the scenes to provide that information to local law enforcement. But like I said before, they are not something that's new. It's just that this rule is new. But many of the other things that they handle have been in place for a really long time. So, kind of, how does FinCEN affect us? And when I say us, I'm talking kind of about the title industry, but specifically us as a title company who help perpetuate the transactions for your clients and customers. And so, because the burden in some ways of this new rule have fallen onto the title company, I want to talk about why it's become part of the title company's responsibility, but why it's going to also be important for you as agents to kind of understand why it's important that you kind of know. So I don't want to go into a whole lot of detail because in Arizona, while you or maybe not be familiar with FinCEN, the predecessor to the rule that's going into place March 1st, we had what's called a FinCEN geo-targeting order. And that order was for some specific counties in some specific states based upon some specific sales prices. But they kind of use that as a predecessor of the new rule that goes into effect on March 1st as a way to kind of find these entities that they thought were using transactions to embezzle money or to money launder the money. They were really prevalent in Miami-Dade County, and I'm sure that you can understand why that might be. In a couple counties in New York. In Texas, they had about 5 counties that were under there. In Nevada, they had some, and then a few counties in California. And so they were kind of just targeting the places where they thought for sure money laundering might be happen, mainly because of drug cartels. And I'm sure you can put the correlation there. But because of the information that they have found during the last 8.5 years of this specific targeting order, they have realized that they need to expand it. And so this rule that is going into effect on March 1st, and it's specific to the transactions that are closing on March 1st. So if you have a transaction that's closing with your customers, if it closes on February 27th, it's okay. We don't have to worry about this rule. It is specific to transactions closing on March 1st. And it's very possible that title companies are going to start reaching out to you about files that are going into effect on March 1st, just to say, hey, listen, this file's closing. We need to do some things because we think that it might be FinCEN reportable. Now, this rule that goes into effect does not affect every transaction. And I'm going to talk about the specifics, but we're going to just start high, super high level. It is in regards to certain non-finance transactions. So if there is a lender involved from Wells Fargo or UWM or Rocket Mortgage, those transactions will not fall under this FinCEN rule because they're checking to find out obviously they're looking for things nefarious. And so they're not going to be looking in transactions where those lenders are involved because there are certain requirements that they're already having to follow from the federal government. So this is based upon transactions that are either cash or they are using unconventional lenders that are not AML compliant. And AML just means anti-money laundering. And so basically they're just not following the compliance rules of the federal government, or they're not required to follow them because of the type of lender that they are. So if they're not AML compliant, then we have to take a quick look at that. But that's not the only trigger. It also is based upon whether the purchaser is a legal entity or a trust or a corporation, basically anybody that is not a natural person. So if you are just doing a transaction that is a cash transaction or maybe using their private funds, but the purchasers are just individuals, George and Julie, then there is nothing to worry about. It is not part of the FinCEN rule. And then it is going to require us to report this to FinCEN. And then that might be where you're like, okay, but what does the title company have to do? And why are they going to require my buyer in these types of transactions? There is a reporting person assigned. And so if a transaction comes through a title company, we are at the top of the list of who has to report that transaction. And we are obligated to report the transaction. We are obligated to report the transaction if those requirements are met in this FinCEN rule based upon the responsible parties. And so that's why the title companies are going to start to take such a big role in this, is because we have been identified as the top person in reporting these transactions. And obviously, because most of these transactions are coming through a settlement office. And if we are the reporting person, we are obligated to collect. And so the biggest thing that I want to say to that as agents and how you can help us is that we have been directed by the federal government to report these. There's no way for us to get around that. And there's some penalties, and I'm going to talk about those penalties in a moment. We feel for your clients. We're not exactly super excited that we have to intrude on your clients in this way. It's not fun for anybody, but we are obligated to follow those federal requirements. And so when we start asking for this information, we need your support to help us get that information from your customers because of the requirement. They are making us be responsible for getting that information. So let's talk a little bit more in detail about what are the specifics of what makes a transaction be reportable. So we talked about it earlier, is if the buyer is an entity or a trust. That's the number one easy thing for you to kind of just have your antennas out when you're filling out your contracts and working with your customers, is that if the buyer is an entity, that is a FinCEN flag. But there's two more that make it be reportable. It must meet all three of those requirements. So if there are an entity, but they're using a financial institution that is AML compliant, such as Wells Fargo or UOWM or Rocket Mortgage, then they're not FinCEN reportable. So they have to meet all three. So buyer is an entity. They're not using traditional lending. They are using either cash or their private loan or hard money. And the residential real property. That means that the transaction that is being processed, the property in question is going to be utilized for residential use. This is super important for us, and especially as agents, as you get comfortable, is that means that if your customer is purchasing a vacant land, but they intend to build a house on it, it is FinCEN reportable. Even if there's not a house on it right now, under current, our understanding of the other real estate items and definitions that we use on a daily basis, we consider it residential if there's a house on it. Well, from FinCEN's perspective, if you intend to use it for residential use, whether it's right now or in the future, it is considered residential and FinCEN reportable. Now, there are some exceptions, and I'm going to talk about them, but those exceptions are going to be very rare. So I don't want you to concentrate too much on those exceptions, and I'm going to give you some really good resources that can help when your client thinks that they may be exempt from this due to some specific exemptions when it comes to the entity and the reason why you're transferring a deed. But we want to stick with those main three to start with. So residential real property, or its intended use is to be residential. It's a non-finance transaction, meaning it's not using an AML compliant lender. It's either cash or it's going to be a hard money lender or a private lender, and the buyer or borrower is an entity. Now, as a note, I'm saying this specific to landmark title. And most of the larger title companies, you're probably going to see this now because underwriters have started to ask us to put this, but there will be a generic requirement on our title commitments that is in regards to FinCEN. It does not mean that the transaction is FinCEN reportable. We are just putting that requirement on title just to make it so that people kind of have their eyes on it, that they understand that if it is FinCEN reportable, we as a title company are obligated to report it, and we are obligated to collect that information from the buyer and seller as needed. Does not mean that it is a FinCEN. It will just be a generic requirement on title commitments that you'll probably start to see from any of the other partners that you utilize. But all of the underwriters that we utilize at Landmark have highly recommended. And so it's become part of the standard language on our title commitments. So I want to break it down just a little bit. I think that we've kind of broke it down, but for those of you who maybe work a little bit in maybe residential, but you do a little bit of commercial and you're like, well, is it going to be commercial or not? It is going to be residential because you said it's based upon the intended use. So I'm going to walk through that really quickly. So I just want to break down a little bit what residential means. And the definition that I am showing here on the screen is directly from FinCEN. This might not necessarily be what residential means to us in real estate terms, but this is what FinCEN's definition is. So they are saying it's a property located in the United States containing a structure, that's really important because I'm going to talk about apartment buildings in a minute, designed principally for occupancy by 1 to 4 families, vacant or unimproved land, and it's zoned for residential or a permit has been issued for residential use. And it's designed principally for occupancy by 1 to 4 families. And so that's why we talk about intent, is if it's zoned for it, even if it's unimproved, we have to make sure what the intent is. So when I say 1 to 4 family and residential, we're talking about a single family home. Absolutely. Am I talking about a fourplex? Absolutely, because it's 1 to 4 family. Am I talking about an apartment building? Maybe, but probably not. This would be my example. And I don't want to go too far into detail, but you can always reach out to Michael afterwards and I can give you some more resources. But the easiest example is if I have an apartment building that's being sold because you're a commercial realtor and there's 28 units in that apartment building, that is a commercial transaction because the structure has more than 4 family units in it. And so it is not FinCEN reportable if an entity is purchasing that property. However, if a builder is building an apartment complex, but they're building it as fourplexes, so I may have 8 units, but each of those units only have fourplexes on it. There's no more than 4 units in each building. Those don't happen too much. A lot of times those happen actually in condominiums. If they're kind of building a condominium, retirement community, you might have it so that there are a bunch of fourplexes. They're not 5-story apartment buildings. They're just 4-story. If they are only meant for 4 people in each unit or 4 families in each unit, those are probably residential because it's 1 to 4. So when we get to 5 units in one building, then it can become commercial. And I know that can get kind of confusing. And so I'm going to say this for your commercial team. Most commercial buildings are going to continue to be commercial, but there are going to be some commercial transactions that will actually be FinCEN reportable because of the use of the structure and how many units are in that structure. So just be aware of that. And I know it's kind of confusing, and that's why we're going to let the experts help us. But if you have any questions while you're working on those commercial transactions, don't hesitate to reach out to us. Vacant lot in a residential subdivision. Yes, because somebody's going to come in there and build a bunch of beautiful houses on it. So it is residential. Vacant lot for commercial use. If you're buying vacant lot, but it's going to come and build a 14-story high rise on it for office buildings, it's not residential. Mobile homes, if they're escrow only files and you're not buying the land, just mobile, they have nothing to do with FinCEN because there's not a deed involved in there. So these are just some of the choices. and the questions that we have. I see I've got a couple people in the chat. I'm just going to stop really quick and take a quick look at our chat, and then I'm going to jump back in. And John, that is a really good question. He says, is the family trust viewed as an entity? And in regard to FinCEN, the answer is yes. It is currently considered as a FinCEN reportable transaction. Now, it's all down to the buyer. So I don't care if the seller is in a trust and they're selling. Just remember that the FinCEN rule is based upon it being buyer or borrower. I'm not worried about whether the seller is an entity. So that's something to keep in mind. Okay, institutional lenders. This is where I hope I don't make your screen too wonky in that what does institutional lender really mean? So FinCEN, once again, we want to use FinCEN's requirements. They is an institutional lender that has an obligation to maintain an AML program, which we talked about was anti-money laundering, and an obligation to report suspicious transactions. So that's why you may be familiar, if you've been in this industry for a while, the OFAC list, right? It's the list where somebody might be doing something bad. And so when we try to send money in and out of banks, sometimes somebody gets caught on the OFAC list. That is part of the anti-money laundering program. So when lenders and banks are part of that, there are certain requirements that they have as far as making sure that they've got programs in place to help stop nefarious activities when people are trying to do fraud, whether it is identity fraud or money fraud, and they're required to report it. They have to report it to the federal government if they find something. Now, you're thinking, how in the world are we even going to know who those people are? People who are typically not AML certified are hard money lenders, private lenders like grandpa or grandma, or somebody who just is utilizing some funds that they have as a way to make additional fund money through interest, and so they're selling it. Seller carrybacks, and sometimes contracts for deeds, depending upon how that contract is laid out. And so I do want to show you some resources, and I will put these websites in the chat after we're done, but I'm going to pop those in the chat as well, so I can show you the resources that we utilize, and you can certainly utilize them too if you're helping your customers find that lender. I'm going to open up the chat really quick.
Christine, yeah, we have 2 questions, and since you paused real quick, I will say this. Christine and I will put together like a care package of all the documents that we feel like is necessary for you to have. I know there's a checklist and some things from FinCEN itself that we're going to include in that email. So if you're on this call today, you will be receiving an email either later today or tomorrow with all that information.
All right, so really quickly, does it apply to rentals as well if the property is an LLC? Absolutely. The intended use is residential. So if it's a rental property, but they're renting it out to an individual that's going to live in that property, it 100% is going to be reportable. Can a buyer purchase property in their personal name, then transfer it into their trust after the transaction is completed? They absolutely can. I just want to put this caveat on there and just know that I cannot say how other companies are going to maintain their compliance with the FinCEN rule. But this is what I can say, is if you want to do it in an individual and then they put in an entity afterwards, most of the third-party companies that will be helping prepare those deeds after closing are still going to be FinCEN required to be compliant. And so even if they don't do it with us, they may have to do it with that third party. The only people who are not obligated to be a part of this FinCEN rule are individuals themselves. And so on my next slide, it actually has a roll down of the people who are required. So if a title company is not involved, then this would be the next person that's responsible for it. So I'm not going to say that they cannot. I am going to say that before they make that decision, whoever they're going to utilize to prepare that deed and record that deed outside of closing they may want to check with them to find out if they will be required to report to FinCEN, because it's not based upon the fact that I'm just doing a transaction or that I have a contract. The FinCEN rule is based upon a deed transfer. So regardless of whether the deed is done inside of a closing or outside of a closing, if a deed is transferred and the recipient is an LLC and there was a lender, then it may be FinCEN reportable. But it may not be if they did it after closing because there's no lender involved. So, but there's also no monetary value allowed. So I don't care if it's for $0, it could still be for FinCEN reportable. So the best advice I can give you is, if that's what your agent would or your customer would like to do, they need to check with the third party that they're going to utilize to have that deed completed to see if they fall under the FinCEN requirements for reporting. Let's see, I've got another one in here. Is it reportable with an agreement for sale where the legal title sells with sale? So it's a really good example, kind of a contract for deed or agreement for sale. It all depends if a deed is recorded. A lot of times in agreement for sale, there is no deed being recorded. The only thing we're recording is the agreement for sale, and the deed doesn't get recorded until all the money gets paid, right? And so those are a case by case basis based upon how that agreement or contract for deed is being handled. But if there's no deed being recorded, then the answer is no. If the deed is being recorded, then it's a maybe. Are we able to self-record a deed into our trust or LLC after closing without reporting? Yes, you are. Like I said before, the only people that don't fall under the FinCEN rule are the individuals themselves. And so, yes, you do have that ability to self-record if you have that capacity to do so. Denise, give me a second. I'm going to run through a couple more slides, and then I think it's going to help answer that question as far as legal exposure with FinCEN. I'm going to say no, but you have a responsibility in helping make sure that your purchaser or buyer gets theirs complete. So give me just a second. I'm going to get to another slide, and I think that will help you. So Linda, that's a great question. Because of our absolute obligation to the federal government to report the transaction to FinCEN, it will not take longer to close as long as the borrower and the seller complete their forms. Their refusal to complete the forms will 100% delay closing, because we will not be able to record and disperse if those forms are not completed so that we can report. So as long as your customers are completing those forms prior to closing, and I'm going to talk about how we're working through that process to get them completed and make your customers' lives as easy as possible, get those completed. But it can take a longer time to close if they don't complete them. So that's the only reason that it will be there. 100%. Yes, as agents, if you think that it's possibly a FinCEN because they're an entity or they're thinking, you absolutely want to be having these conversations with your customers during their contract. And I'm going to give you some resources that are easily available. And like Michael said, he's going to send them out, but I will show those websites with you as well, that I think will help make those conversations a little bit easier. All right, I'm going to sneak through here a little bit. So transfers that don't need reporting are easement grants or transfers. So, a lot of times for the rural areas, there's easements that are not necessarily associated to the deed of the property, but it's the access easements or the easements of pieces of property, as transactions happen. Those are not reportable. Transfers resulting from death. So if a probate or a will says, listen, he has died, you have permission in the will to transfer that property into this trust, because it's part of that will or probate, it is not going to be reportable. Divorces. If the divorce decree says that the customer or the husband or the wife is going to transfer it into the husband or wife's entity or their trust, then it's not reportable because there is basically a government direction to say that this is what needs to do. Transfer to a bankruptcy estate, that is only going to ever happen on commercial transactions. But if it's not, then you'll be able to do that. It is important to remember, whoops, I didn't mean to sneak there is no dollar amount. So like I said, gifts can still be reportable unless they fall into one of those exceptions. Transfers by U.S. court, those are exempt. Basically, if the federal government is giving permission or the local government is giving permission, then those will be considered items that are expendable. Also, if you're moving in and out of a trust, like husband and wife come out of a trust because they need to refi and then they go back into a trust, as long as they are the only ones on that trust and trustee, in most cases, those are not reportable because it's going just in and out of their individual. They're not sending it to another LLC. They're not trying to move money around. It's simply for those types of transactions. And in most cases, those are non-reportable too. And I'm going to go into a little bit more in exceptions, but remember, like I said, those exceptions are going to be so far few in between that you want to stick with the main 3 points to make sure if they're reportable or not. But remember, I was talking about the reporting cascade. So when the person asked the question earlier on kind of if I have somebody else prepare it, will they have to report? So this is the rule in regards to, it's based upon who is helping with the transfer. You can see closing or settlement agent is at the top of the list. That's why we have no workaround. We are absolutely pointed out and said, you must report these transactions. So there's no way for us to work around it. If you're the preparer of the closing statement, that is us too. So if we're preparing a closing statement and we're transferring into an LLC, I'm culpable. So we have to report these. The person who files the deed or with the recording office, our office and our title company is recording the deed for you guys when the transaction's complete. So the top 3 reasons of who has to be the reporter to FinCEN, we are the top 3 reasons. Also, if you're the owner's title insurance underwriter, so if you try to do a title only file and you think, well, I'll just go directly to an underwriter, which I know none of you will do that's something so specific. They will do that. So this is what I will say. And then disperser of the greatest amount of funds. Sometimes people are dispersing it out of there. Or the preparer of the deed, which is a lot of times an attorney. When you talk about that third party who's going to do it, if they're the ones that are going to record it, because that's number 3, or number 7, if they're the ones who prepare that deed, they're at the very bottom of the list, but they're still on that list, they are required to follow the FinCEN rule. And so if they have to correct. The only exception to number 7, by the way, is the individual, like the person talked about before, is if you as the individual do it, technically FinCEN is not going to do anything about that at this moment in time. But if you use a third party, if they are doing either number 3 or number 7, they most likely will have to fall under those same FinCEN rule requirements. So that's just something to keep in mind as you do that. Now, to the person that asked, am I as an agent culpable? You can see agents are not on this list. So technically you are not culpable. There's no liability here, except for you guys are amazing, great customer service partners. You want to help make sure that your buyer and your seller can get the file closed on time. And so that's where we need your help, because I have my hands tied. I am required to report this. I cannot move that closing forward if I do not have the stuff that I need to report a transaction. And so you are, while not culpable and responsible and liability wise is none to this FinCEN rule, from a customer service perspective, you definitely have some responsibility in making sure your customer understands that there's no workaround for this and it is a requirement. Okay, I'm going to jump back into the chat really quick. So yeah, 1031 exchanges in some regards are exempt. the easiest way that I can say it is they're basically doing a tit for tat, right? They bought a property and so they put in their 1031 exchange, and so now they're selling it, or they had sold a property and now they're buying one. As long as they can see that that 1031 exchange came from a property and now it's going to another property, yes, you'll be able to do that. Denora, I'm going to be honest. I am not a tax attorney. I am not an attorney, and I'm not a federal agent. And so the best response that I can give to you as far as your A114 is you need to talk to your CPA. They're going to have those questions, but that's unfortunately not one that I will be able to help for you. Is the brokerage and agent name part of what is reported? No, it is not what is unreported. And I'll pull up the forms for you in a minute and let you see what those forms look like. But no, you are not they care in just in the simplest terms. We talked about at the beginning, this is all about money laundering and embezzlement and things like that. They care about the money. They're tracking the money. They want to know where the money came from, who gave you the money, what account it came out of. So those are the questions that are on the form. Is I want to know everybody who is a part of this LLC, anybody who has ownership information on it, and I want to know where the money came from. Those are the main 80% of what that form consists of. They're not worried about if an agent, from FinCEN's perspective, they are not worried about who the agent was. That's a good question, though. Okay, well, let's keep sneaking. Okay, so you talked about kind of what is on the form. And so this is kind of the information that they're pulling in. Person, that's going to be landmark title. So they are pulling our information into there. They're going to pull the property information and the legal description. I will say for those of you who represent the borrower, we're going to help try to make sure that the legal description information is in there, because I know that's not something that borrowers are really going to have a whole lot of access to. And so as these forms get filled out, we are going to do everything that we can to make sure that the legal description is in these forms for you. But the entity or trust is going to ask for the name, and if they're doing business as other names, it's going to ask for that. Their business address, they're going to ask for their TIN or their social security number if they file individually. They're going to be asking, you can see where it says total consideration. That's where's all this money coming from. And then they want to know about the signing, who is signing these. Do they have a TIN number or individual? What capacity are they doing it in? They're also wanting to know, as far as the owners go, where do they live right now? What is their TIN number? So you can see that it's all based upon the information about that entity, who are the people in that entity. And I also would like to know, where's this money coming from? So I want to talk about some resources for just a second. We are partnering with FinCEN Real Estate Report, and this is where my computer is going to get wonky for just a second, so I apologize because I'm going to jump over onto the internet for just a second. So there's a couple really good resources, and I want to talk about FinCEN Real Estate Report. I'm currently on the FinCEN actually website. That's the government website, but I'm going to jump over to this website, and the email that we're going to send out tomorrow will be there. We want to make this as easy for our customers. This form in its entirety is 10 pages for the buyer, and it is about 2 pages for the seller. They ask very limited information on the seller. But for the buyers or the borrowers, it's about 10 pages worth of information. And we want to make sure that we make their lives as easy as possible. We are partnering with FinCEN Real Estate Report. They have been given the gold star by all of the main underwriters that are used: Old Republic, First American, Stewart, Fidelity, and of course, we at Landmark partner and are part of the Shattuck companies of FNTI. But all of the main underwriters have endorsed this platform. And so instead of making your customers fill out the paper forms, we are going to be utilizing their digital platform. And the reason for that is not only does it make it easier for your customer to complete those forms, the level of customer service is amazing. There's a chat feature inside of the form while they are filling it out. So if they get stuck on a particular form, they don't know how much ownership interest they need to put in something, How do I have to break out every wire that I'm sending in for closing funds? And they also have a 1-800 number. And for those customers, I don't know if any of you kind of help some of those who are maybe doing some estate planning. And so they're putting it in entities or trusts, but they're maybe a little bit older. They will actually help them walk through this. So we can call the 1-800 number and they'll actually help them fill out the form. The only portion that the customer has to do is the certification because they have to certify that the information entered is correct. But this team will actually help them. And if they don't know if they're exempt or not, they've got some amazing resources and will help them determine if we should consider them to be exempt or not. So on this website, you should see this button that says free resources. So the two that I want to point out to you, and I recommend that you kind of play in all of these if you want to, but the two that I really recommend for you guys as agents is the first one is a free exemption checker. You can point your customers to this one, and it's a super easy checker that kind of just walks them through. Not that they have to file a FinCEN report because that's going to be our responsibility, but do they think that their LLC might be exemption? So it's just going to ask this question: is the property residential? And it's going to list what I mean by residential. So it helps kind of give them some visual aids of like, this is what I'm talking about when I say residential. And if they say yes, then it takes them to the next slide. And the next slide says, select the type of buyer. Is it an LLC, a trust, an individual person? And you're going to say not an individual person, or if they say individual, you're not reportable. That means that George and Julie got on this website and we accidentally sent him here and we don't really need them to be here if they're taking it in their individual name. But we're going to say, okay, they're not an individual name. Then it's going to ask them, okay, which one of is it cash? Is it a hard money loan? Is any portion paid by a bank or credit union? Is any portion by a large residential lender? We're going to just say hard money lender. Then it's going to pull up these exemptions. If you want to see if any of these exemptions might apply, I love this site because if I'm like, I don't know what this means, you can highlight over that little I and it will give them some information. And so if you wanted to use this when you're helping them fill out their contracts and deciding whether they want to put it in trust or entity, this may help you make those determinations if you're trying to decide if they're, in an entity or not. Now, I will say this partner is going to make it be pretty easy to fill out these forms. So even if it ends up being FinCEN reportable, it's not the end of the world. It's going to be, a little bit of an inconvenience maybe, but it's definitely not the end of the world. And like I said, these people are going to make it so easy for us. And we've already moved two that we have closing on the first through it. And it's been such an easy experience with them. And we're excited to be able to partner with them. But you can see all these different entities and you're going to say, if you say no, then it's going to come up and say, okay, you're probably FinCEN reportable. And it's going to put their ad up there. And like I said, you guys are not responsible for filing. The customer is not responsible for filing. That just means you can expect that when we get the contract, we're going to send you a form because it's going to be FinCEN reportable. The other one is for, you're like, I don't know. We're looking at maybe a hard money lender. We don't know if they're reportable or not. This has got some tools. You can pull up the main banks that have a bank. If they're with the FDIC, they'll show up. If they are FDIC certified, they are not reportable. The credit unions, there's a credit union lookup. And then there's also an NMLS number. So most lenders who have NMLSs are AML compliant, and so they are not required to have FinCEN reporting. So you can utilize these checkers if you would like to be able to do that. But there are no databases for hard money lenders. And they do have to be AML and SAR certification, which most hard money lenders and private lenders are not. And so we will report them because we'll have to consider them that they are part of a possible reportable transaction. Okay, I'm going to stop really quick. Look at the chat. Yes. So, yep, you got all levels of the members. Yes, will have to be part of the report. That they have any ownership information. So, there are some big LLCs where they might have three owners, but two members that help them sign documents. They're probably not going to ask for the member information because they don't own the company. They're looking for who owns the company. But in some instances, if there's, if that member has any ownership right to it, they're probably going to be asking for that information. Yes. Really good questions. So, like I said, this is FinCEN Real Estate Report. This is the team that we're going to be utilizing to help us fill out the form. And your customer, when it closes with Landmark and we see that it is a FinCEN reportable transaction, we'll send you an email. We're going to send it both to the buyer and seller because, like I said, both parties have to fill in a little bit of information. We'll include you guys as agents on those emails. And then we'll send it out, letting them know that we're about ready to send them a link to from FinCEN Real Estate Report, and they're going to help us complete those forms. We're doing them all digitally. That's because FinCEN requires all of the forms to be digital, and so we're just going to use a partner that will be able to do that. Um, Dennis, it really depends upon the LLC and when they actually go to complete the form. And I'm going to show you where you can find a copy of the form from FinCEN's website if you want to kind of take a gander at it. But that's one of the things that the partner that we're utilizing will help them if they are like, I don't know how deep I need to go. But for most part, it is basically ownership. They want to know who owns that. And it is most of the time owners at the deepest level. They want to see how far it goes. So if it's an LLC of an LLC of a member of an LLC, they're going to want to know who owns this LLC, who owns this LLC, and who owns this LLC. It can, it is important to keep that in mind for sure. Absolutely. Okay, so kind of to give you some of those resources that are available, I'm going to show you where you can find them. So this is the Financial Crimes Enforcement Network's actual website. And they have some really good tools that are available here that you can give to your clients. And there's also a good portion for you to be able to educate yourself as well. And I will say they update this information quite often. And so we have utilized this over the last couple of weeks as they've kind of updated their stance on some items that kind of linger in the commercial, is it residential world. And it's been very helpful for us. But the section that I want to make you available for is this one that says quick reference guides. There's an exception form here. Okay, hold on just a second. I apologize. It looks like I am sneaked in somewhere that I need to get out of. Okay, I'm fine. All right, I apologize. I just thought that I was four places at once, but it does not look like that I am. I'm so sorry. But on that FinCEN website, oops, that's not is it gives you some really good forms. I really love this form. It's an introduction to FinCEN. And so if you have, and we actually will be sending this out on all of our transactions. It will be part of our open package just to kind of help make your customers be aware of FinCEN and a better understanding of it. But it's a really good resource, and I highly recommend that you make use of it. They also have an exemption form. So we were talking about all the exemptions that we have. And this one is really good to kind of help understand what those exemptions look like as well. And like I said, there's an exemption checker on FinCENRealEstateReport.com. And this one will, kind of help as well. But you can always use Landmark if you need some additional assistance. And we can always get you in contact with those experts, like I said, at FinCENRealEstateReport.com as well when we're working there. I'm sorry, it's kind of sneaking in there. All right. Does anybody have any questions? Let's see if I got it. Okay. All right. So kind of as we kind of finish up, is we're talking about, the last part of our understanding of what FinCEN is that just know that we understand that this is going to be something new for your clients. There's no workaround for it. We do have to report. It's the requirement and the new regulatory requirement from the federal government and the FinCEN department. But we are going to try to make this as easy as possible. We want to give you as many resources that we can. And we want to be able to help your customer, kind of understand those requirements and use partners that are going to be able to do this. Now, I will tell you, I can't have incomplete reports. They won't let us file them. So we have to have those reports completed. And in order to make this easy, I will tell you, and almost every title company that you're going to work with is probably going to charge a FinCEN fee, just because of the amount of work that it takes on our end to collect this. And most of us are going to be using a third party to help this. So there, you will see a fee on your closing statement for FinCEN servicing, just because to make this be easy and so that your customers not having to fill out those forms and to make sure that they have access to that amazing customer service team, there is a fee. I will tell you, probably in comparison to many of the other partners that you might utilize, ours is probably going to be much lower. But I do want to make you aware that there will be FinCEN fees that you'll probably start to see in your closing statements, just because of the amount of work that it takes to get these done in the background, and also the partnerships. This fee that you'll see on our side will be a pass through, and it's just simply the fee from FinCEN. We have to maintain this information for 5 years, and we are required to make sure we have access to it, just in case FinCEN comes asking for them. We've got to make sure that we have it. And we do have 30 days after closing to file those. But we all know, and we've all been working with our customers for a really long time, that once the file and transaction closes, buyers and sellers are not exactly excited to help us get information, because they've moved on with their life, which is absolutely understandable. And so that's why we're requiring that we will not record if we don't have these forms filled out, because getting that information after closing is going to be almost impossible. The FinCEN does give us 30 days to report those transactions, but we will not, in order to make sure we have that information, because once again, remember when we're looking at that cascade, we are at the top of that list for being responsible. And so if we don't have that information, it doesn't matter why we didn't gather it at closing. The responsibility won't be on the agents, it won't be on the purchaser, it won't be on the seller, it will be on Landmark. And so we want to make sure that we are following the new FinCEN rule. I hope that this has been helpful for you guys. I hope it's given you a better understanding of how the FinCEN rule looks like. And like I said, there's lots of different, exceptions and maybes in this transaction, but the majority of your transactions are either going to be a simple yes or a simple no. Is it an entity? Is the property residential? And if so, is it an unconventional lender or cash? And if that says yes, it's FinCEN reportable, and we're going to do everything we can to make that be a smooth process so that it doesn't affect closing, and we're going to get those items done and move on. And otherwise, if it doesn't meet all three of them, it's a no, and we just move on, and we continue do that transaction like we do every other one today. I'm going to give it back to Michael. If you guys have any other questions, I would love to be able to, even if you could come in afterwards, if you think of anything, we'll be able to that. So Dennis, it's important to remember, it must meet all three. It's not just because it's cash, or it's not just because it's entity. It has to be the purchaser is an entity, and it's cash, and it's residential property. It's got to meet all of them. If it's cash, but it's for commercial property, it's not reportable. If it's an LLC, but they're using UWM as their lender, it's not reportable. All three of them must be yes in order for it to be reportable. So it has to be an entity, it has to be residential, it has to be either cash or unconventional lending in order for it to be reportable. But that's a really good question.
Thank you. Go ahead, Christine.
No, no problem. Dennis, that comes back to I'm only responsible for what happens when the deed that I record is recorded and transferred. So what happens after closing, I will say from a title company's perspective, is outside of the scope of our responsibilities. But it does go back to the statement I made earlier, is if you have a third party help you record that deed or prepare that deed, they may fall under the same FinCEN reporting responsibilities, and so it may still be FinCEN reportable.
All right. Well, thank you, Christine. I know you have worked extremely hard to keep us all up to date with everything that's going on with FinCEN and better preparing our escrow team here at Landmark for the transactions that we're going to be dealing with moving forward. So, big shout out to you. I would say this, anyone that's on this call that has questions, either reach out to your escrow officer or your business development partner so that way we can better answer those questions. But we'll go ahead and put together that email so that way you have a list of resources and some value moving forward so that way you're better prepared. And then for some reason, if you feel like you need to hear this message again, we're going to do this same exact training Monday next week at 10 a.m. and Christine will guide us through the training again as well. So thank you everyone for jumping on the call, and I hope you have a great rest of your week. Bye now. Good job, Christine.
Thank you. Now I have to run to my next one.
It's like every 10 minutes you have another training. I know you're
Yeah.
you're busy. All right, I'm really gonna end this call now, but thank you so much. I appreciate
You
you.
got it. No
All right,
problem, Michael.
take care.
Bye.
Bye-bye.